Are house prices dropping in Michigan? This seems to be the million-dollar question, and in this video I'm going to answer it. Stick around, I'm sure you'll be surprised with the response. What's going on, everyone? Andrew McManaman here with Living in Michigan, bringing you the information you need to move within, and stay informed about the fine state of Michigan. The Detroit Free Press came out with an article in the middle of last month about the Metro Detroit housing market cooling down. And that headline alone triggered endless searches on Google asking 1,000 versions of the question, are home prices dropping in Michigan? Short answer, no. But the long answer, yes. Let me explain. It's no secret that the Michigan real estate market is becoming more and more expensive as buyers are fighting tooth and nail for the same properties, driving prices higher, all while waiving their due diligence, selling a body part, and giving away a firstborn child. That's the short answer. All jokes aside, people are putting their money where their mouth is in this housing market. Just to prove my point, statewide data that covers all the 42 regional listing boards in Michigan came to the conclusion that the average sale price increased 13.71% from late 2020. In terms of dollar signs, that's a leap from $226,875 to $257,986. With that in mind, believe it or not, the residential home sales in Michigan declined 10.1% year over year. If home prices are so high, why aren't there more homes for sale? Just like I've said before, and you can see with your eyes, you're selling high just to buy high. On top of that, the pandemic put a lot of sellers on the fence, which is very understandable. Despite the time of year, the latest trends have shown the Michigan real estate market to be increasingly competitive, and bidding wars being a common practice in real estate transaction, which I too can attest to. What's interesting though, and maybe something you didn't notice, is where the most competitive housing markets in Michigan are. Jenison, Walker, Kentwood, Wyoming, and Cutlerville. All areas in Michigan you probably never heard of. All these areas are places on the outskirts of Grand Rapids. If you've ever been to Grand Rapids, it's safe to say it's a desirable area full of dining and entertainment options, great schools, and was honestly considered Michigan's best kept secret. Someone spilled the beans, and the housing demand is unlike any other on the west side of the mitten. What about the other areas? Detroit saw price gains of over 44%, Wayne County saw over 14%, and Lapeer County saw upwards of 20% price gains. All this information just to tell you that the answer to the million-dollar question is hard to answer with a simple yes or no. There's so many factors that affect the direction at which the housing market turns, just like the stock market, which follows suit. After seeing a top CEO talking gibberish on a podcast, the company's stock takes a dive as it gives shareholders an uneasy feeling. Well, same thing with the Omicron variant making its way around the world and Jerome Powell's renomination as chair of the Federal Reserve, which would most likely cause interest rates to increase after saying on a recent video conference, this is a strong economy, one in which it's appropriate for interest rate hikes. Even with the announcement of the Federal Reserve wanting to accelerate its bond tapering and stating that 3 rate hikes would come in 2022, caused the rates to increase just like that. On top of that, holiday spending taking dollar signs out of potential buyers' bank accounts, any chart or piece of data will tell you that home prices are increasing at a minuscule rate. Because at the end of the day, the buyers in the housing market determine what they want to spend to a certain extent. The days on market of listings are increasing. There's a little less competition on homes, though it's still high. Buyers can breathe a little bit and not break their second and third piggy bank just to one-up the next offer. At the same time, the lack of inventory is still driving demand. For example, every week on my newsletter, I include home listings for all the different counties I cover. In Livingston County, for example, it was always 375 to 415 homes on the market from the coming soon and the active. Nowadays, it's around 215 homes. So it's clear as day that sales have decreased because the inventory did too. Over the last week or so, CoreLogic and Adam Data Solutions stated that not only did rental rates triple from 2020, so did home flipping despite the shrinking profits. If you take a look at Detroit's real estate market, it's very safe to say it's booming. There are more investors in that space than ever before, transforming each moldy, boarded home into a move-in ready one. When prices started to increase, investor groups were discouraged to buy up more properties, but in the grand scheme of things, they capitalized on the increasing home prices, flipped them for profit, and or became a landlord to jump in on the inflating rent prices. In an article created by the National Association of Realtors, a group of experts predicted that the annual median home price will increase 5.7% and inflation will rise 4%. Chief economist Lawrence Yun of the association stated, overall, survey participants believe we'll see the housing market and broader economy normalize next year. Yun said, in addition, he expects existing home sales will decline to 5.9 million in 2022, and housing will start to increase modestly to 1.67 million as the pandemic supply chain backlogs subside. Not only is housing affordability remaining a concern, so is the future of demographics. Baby boomers will most likely age into their homes and hold tight. Millennials are the largest group of potential buyers that are facing the low inventory, high prices, and student debt trio. On top of that, a drop in birth rate to a 100-year low creates a stagnancy in the market too. Having a child is usually a motive to sell and buy a new home. So in summary, are house prices dropping in Michigan? The answer at a glance is no, but when you look at the factors of the unknowingness of the Omicron variant, the Federal Reserve's plan of action, seasonality or spending habits, and of course the demographics, it would further justify the likeliness of the housing market to slowly but surely find its way back to civilization. For those of you that are trying to stay on top of headlines, what is your thought on the housing market going forward? Drop your thoughts in the comments below. Thank you as always for taking the time to watch my videos. If you are continuing to get value video after video, don't forget to give it a thumbs up, hit the subscribe button, and hit the little bell so you are notified every time I come out with a new video. Stay tuned for the next one.